Hello everyone, it's Wolfgang Gray. Welcome to Gray's Horizons. Just remember, if you like this video, please hit like and subscribe, and you're always welcome to leave a comment. They don't need to outlaw your business, they just shut off your account. Senator Tim Scott chaired a U.S. Senate Banking Committee hearing in February of 2025. The subject? Debanking, where legal businesses find themselves locked out of the financial system. Crypto firms, faith-based businesses, gun retailers, even media outfits. No due process, no clear criteria, just a vague accusation. Reputational risk, they say. Here's a stat. Over 34% of crypto-adjacent firms report account closures with no warning. That's from the Wall Street Journal. Banks used to want your deposits. You were the supply, they were the multiplier. That was the deal, symbiotic. But the rules changed. Reserve requirements? Gone. Lending constraints? Lifted. They don't need your money to lend anymore. So if you're a bullion dealer, a crypto firm, a low-fee, low-friction client with too many questions and too few overdrafts, they don't want you. Because the bank isn't symbiotic anymore. It's parasitic. It needs customers it can charge, surveil, and model. If it can't monetize you, it eliminates you. You may have money, but you're no longer profitable. But what counts is risk. For years, regulators let banks cite something called reputational risk, a vague catch-all excuse. If your name appeared in a headline or your business made someone uncomfortable, you could be flagged. There was no statute, no court, just internal memos and supervisory nods. Then it became policy. Your access to money depends on optics, not legality. But by mid-2025, that changed. The OCC eliminated reputational risk from exams, Bulletin 2025-4. The FDIC issued internal directives pulling back. The Federal Reserve announced it would no longer factor reputation into supervisory ratings. These weren't headlines. They were quiet rollbacks of soft censorship. Enter the Firm Act. Senator Scott, Representative Barr, and even Representative Torres moved to strip regulators of their optics-based filters. No more shadow bans via spreadsheet, no more financial profiling. Well, we all should be skeptical and recognize that these systems have a habit of resurrecting themselves. They always find a way. Today's rollback could be tomorrow's reboot. The business model needs to be reset to make deposits desirable again, for things to really change. This isn't new. Operation Choke Point in the 2010s, a DOJ scheme quietly pressuring banks to shut down undesirable sectors. No court orders, just a nod and a memo. And now it's back, rebranded under AML and ESG. You want out? There's only one path, infrastructure. They can't say no. Decentralized systems don't care about your politics, your optics, or your industry. They only care if the transaction computes. And that's the threat. That's why the backlash is growing, not against crime, but against financial sovereignty. They don't cancel you with a knock at the door. They just flip a switch at the bank. And the only fix? Systems they can't control. I'll see you in the next one.